Hello, everyone. Entering a new market is never simple. For many firms, the biggest challenge is not the idea itself, but the setup, compliance, and cost that comes with it. This session brings together experts who have worked across APAC to discuss what it really takes to enter the market and what firms need to think about from the start. Welcome our moderator, Eugenio Aconjajoko from APAC Management Consultancy, and our panelists. Please welcome them with a warm round of applause.
Thank you for coming for the boring regulatory panel, but we will try to make it interesting. Well, someone wrote it's boring. So we will discuss about regulations in the main jurisdictions in the Asia-Pacific region and some over-regulations. We will say horrible things about the regulators. We will try to understand what are the compliance challenges when you switch from, when you add the digital asset domain to if you are a retail broker and vice versa, because there are several challenges that are not just at the level of adding new products, but whole infrastructure level. So we are lucky because we have experts from both the corporate world and legal counsels to the industry. So I ask the speakers to introduce themselves briefly. I'm Eugenio Aconjajoko, Managing Director of APAC Management Consultancy. We do acquisitions in the industry, and we do regulatory compliance and some executive search.
Hello, everyone. My name's Gavin Ward. I'm the CEO of AXI. Been in Singapore for 17 years, originally as head of Asia for CMC Markets. After that, I was head of Greater China for Oanda, and then been at AXI for around about 9.5 years.
Hello. Can you hear me? Okay. Hi, my name is Cham. I'm the ex-CEO for Enzo Capital. And I've been in the CFD industry for about a decade, and I'm happy to hear. Thank you, Finance Magnet and Eugenio, for the invitation.
Hello, everybody. My name is Antonio Alvarez. I'm the Group Chief Compliance Officer for Crypto.com. Have been in the crypto industry for about a decade now, getting licenses and operating around the world in a very evolving regulatory environment. So I'm looking forward to the panel.
Hi everyone, my name is Grace and I'm the head of FinReg at Drew & Napier, which is a law firm in Singapore and that covers the region. So I personally cover Singapore and Hong Kong, have also been involved in this space for a long time and in digital assets in particular the last decade together with Antonio. So yes, we have seen crazy and amazing things, yes.
Thank you all. Grace, I wanted to start from you. So first of all, let's try all to speak louder because I think it's not, there's some problem with the volume. What are the most interesting changes, relevant changes that you saw in the jurisdictions that you follow? And then I will ask, any of you who wants to answer, you can just pick one or two jurisdictions that are the most relevant to you. But I wanted to know from your perspective, because a lot happened in Singapore and Hong Kong in the last year.
So I think on across different asset classes, there are always a lot of interesting developments. In the security space, we are seeing a lot more collaboration between different types of entities, a lot more exploration of robo-advisory, AI tech in the delivery of services to clients. In a lot of the licensing aspect, which has been very active in the last 5 years in particular. In Singapore, we saw the payment services licenses and a lot of them being used for account as a service and different types cards as a service kind of products, as well as digital asset licensing. In Hong Kong, it's similar. In fact, I think we saw the first 2 stablecoin issuers in Hong Kong be licensed, and this follows after the licensing of a lot of the virtual asset token operators. And as the next stage, we are continuing to see a lot of collaboration, whereby some of the brokerages are also looking to extend and include ETFs and different types of derivatives in their product scope. So basically, we are seeing a lot of cross-merging of regulatory developments in the region as well.
Thank you. Antonio.
Sure. To complement that, totally agree. What we're seeing specifically on the crypto side is a much more intentional and much more tailored regulations coming out, right? So historically, crypto was regulated mostly from a financial crimes perspective. And nowadays we're seeing a lot more specific, like stable coins, like derivative type, commercial capital market types products, especially in regulators that are moving even farther, especially in the Middle East, where we've seen regulators starting to come up with specific rules and guidance on tokenization of stocks, tokenization of bonds, and even tokenization of mutual funds.
So please.
I think I'll speak a little bit about the CFD space. It's getting quite interesting. I think obviously different regulators move in different speed, and the more developed countries obviously have a more longer roadmap in terms of how they've been regulating CFD operators. But I can speak a little bit about ASICS and Australia. I think ASICS has been changing its stance in terms of regulations, from formulating regulations to enforcement, right? So with the ASICS 828 report, you can see that 52 of the licensed operators actually got reprimanded and forced to return 42 million Aussie dollars to 38,000 retail investors because of breach in regulations. And that says that's a clear example of how regulators can get tough on business operators if you're not careful. So regulations is going to continue to be a big part of how CFD operators are doing business. And of course, the more experienced operators tend to have a better understanding in terms of depth and width of how to operate in different regions and different countries.
So three major things of particular interest for me over the last 6 to 12 months. One is the regulated brokers, the squeaky clean brokers, listed brokers are aggressively going into frontier markets because they have to continue to grow. They've grown as much as they can in those regulated markets and are now going offshore. That's one thing. Number two is SISEC. So SISEC was the bastion of Europe to get a license there. What we're seeing is a lot of companies are leaving SISEC because they want to do business in Europe, and SISEC is seen as an overzealous regulator. The third thing that's super interesting is binary options, the scourge of the industry, has reinvented itself as an event contract that now is totally legal everywhere as well. So we're seeing lots of people going into it, prediction markets, call it what you like, it's binary options again. So those three factors, for me, super interesting. For us, we're trying to weigh up where do we go next with these things, looking at prediction markets, looking at all those frontier markets where we got new competitors, the likes of IG, the likes of SAC. So all these people who previously wouldn't deal with these areas are now going for that space as well.
Thank you very much. Yeah, so about Cyprus, I completely doing acquisitions. Unfortunately, lately, when someone calls me that they want to sell their Cyprus license, I tell them just give it up. There is no point losing time, because even if they find a taker, SISEC will sometimes can take 1.5 years to process. No, we all know the problem. I wanted to ask something, because we were talking about, for example, in case of Hong Kong and Singapore, but probably Hong Kong more in terms of the RWA tokenization. You mentioned Dubai. There has been a bit of a shift. I will say maybe less than 1 year ago, China started say something to Hong Kong to say, look, I'm not saying you are not supposed to do this RWA, but just grow at a slower pace because we want to see what's going on here. And then I saw some operators switching to Dubai, Vara, and so on. But at the same time, this thing of the interest for RWA is growing so much and so fast now, you cannot leave a meeting without discussing about tokenization, that I am assuming on top of Hong Kong also, Singapore will do some more progress and maybe some other upcoming jurisdictions. What is your thought about this Hong Kong, Dubai duality? Yeah.
I think the trend which you've mentioned on RWA and tokenization, definitely in the last 2 years, we have seen a big rise in the interest in such projects and the launches and tokens which are linked to money market funds and some of the developments in this space. I note the China question is quite sensitive, and in fact, we have been involved with some projects with some clients where they have had to review the beneficial owner, the holding of companies, and whether they are linked with Chinese passport holders quite closely if they operate in the region because of the sensitivity there. Even in markets where some of them may be offering services to Chinese persons who may not be Chinese residents but elsewhere, there's a sensitive question of whether they continue to have exposure from a China perspective. So for a lot of our deals, we do a lot of change of control, mergers and acquisitions in the region, and we have had to include this aspect of bringing in China Council as well to review some of the underlying and assess the risk in terms of the marketing, the product scope, and the existing client exposure. And this is why it's tricky, because in Hong Kong, you're right that because of the exposure and close nexus between Hong Kong and China, this is inevitably a sensitive question as to how you may not be able to service a lot of the Chinese clients with these types of products. In Singapore, it's a question which is more nuanced, let's just put it that way, because traditionally Singapore companies have not been stopped from offering services on a reverse inquiry basis to other jurisdictions. But China brings about a more nuanced question because we also have certain restrictions in the form of a MAS guideline on payment settlement and the kind of entities you can use for payment settlement. And together with the most recent incident which we had, we call it the 3 billion money laundering scandal involving the Fujian gang. This has also heightened the scrutiny when it comes to persons with dual passports. So if you have a Chinese passport, but you also have another Vanuatu passport, and your client is coming up with such a profile, this triggers enhanced due diligence, right? So all that affects the onboarding and ability to support Chinese clients in this space who have a lot of interest, I've noted, on the RWS space.
Thank you. Antonio.
Yeah, specifically, taking the question on the RWA, specifically in the Middle East, where we're seeing over the last couple of years is that a very keen interest from the regulators, to the point that regulators are starting to compete with each other as to who comes up with the easier or with the most suitable, most convenient and faster regulations in order to be able to issue those real-world assets, right? Also very gun-ho on prediction markets, on binary options, or event contracts. Yeah, there's such a number of names for it, right? But also very, very gun-ho on that. Obviously, those have a lot more gaming aspects of it. So the Middle East looks at them more as a offshore offering, not locally, obviously, which is where Singapore is struggling a little bit with, right? The ability, because Singapore is such a protective market, protective of their citizens, of their against speculation, against gaming, against a number of things that the government doesn't feel is right for its citizens. So but they haven't found yet that balance, I believe, between offering those services cross-border versus locally, which the Middle East has been very aggressive with.
Thank you. I wanted to reconnect to what, so Gavin was mentioning prediction markets is binary option all over again. But many people see it closer to the actual betting than to, because binary option, in most cases, the underlying was still financial products, while in financial markets, most underlying are non-financial products. And other than how it is classified in places, because you were mentioning the UAE, they might also consider that these products, beyond the normal laws, also from a maybe Sharia law point of view, they might be haram. So I'm not sure if
we have to make a
distinction. Do you think they are
right?
regulating them as they are?
Yeah, because to Gavin's point, right, binary options has been around for a long time, right? They've been fully regulated. You can buy an event contract, right, on the inflation numbers next quarter, for example, right? And that's an event contract. We used to call it up downs. We used to call it whatever, right? A number of questions. What's been different lately is when the sports become the underlying, when sports and games become the underlying event, right? And then that puts them across the border in many jurisdictions because then it's too close to gambling, right? There's other jurisdictions that are feeling a lot more comfortable with it, like the U.S., right? But the product itself is very different than a gaming or than a gambling product because it's a contract. And for me, the biggest difference is that once you own it, you can sell it before the event takes place. Well, if you go and you place a bet on a football game, right, you're stuck with a bet until the game is over. You can't change your money. Right?
But I mean, that's spread betting. Spread betting you can sell during the event as well,
and
which again
betting,
is very popular in the UK.
Right. But so there's differences like that, right? Where you can actually trade it. There's no booker. There's no booking. There's no odds, right? There's no from a construction perspective, the product is different.
Thank you.
So just to sorry, go ahead.
I think that the whole discussion about prediction markets and binary options, I think we are sometimes a little bit guided by what had happened before, and like what Gavin said, it's the Scrooge of the industry, but the devil is actually in the details, right? I mean, if you put on a contract and you put a stop loss and a take profit, and it hits it, is that a binary outcome, right? So presenting it in a right form should be considered by the regulator. Some regulators will take a more conservative stance. Some regulators will be a little bit more open. But I'm really surprised with the development in the last 2.5 years in the US with Kalshi, with Polymarket, right? And I had certain conversations in my field of work with them on what do they think. But I think at the end of the day, if we navigate correctly, this will become an eventuality, right? There'll be countries, there'll be retail investors who want that product. How do you offer it in the most regulated way? Can you offer it in the most regulated way? I think that's really the discussion.
Well, so what's interesting, you picking up on what you said, Antonio, is so sports is considered gambling, but if I do an event contract on which raindrop lands first, is that okay? Or if a chicken fighting another chicken, is that okay? So what's a sport and what's not a sport?
And he was going to score a goal within the first 20 minutes.
Or
right?
England win the World Cup, for example.
Spain, yeah.
Or Spain, maybe.
Well, Italy will not win the World Cup. Thank you, guys. Thank you. So I wanted to change a bit the subject, and we're discussing about more and more brokers going also offshore. So there is this constant feeling. This is something that is not this year, not last year. It's been 10 years that we discuss this trend every single time on the panels about the over-regulations, about companies going from tier 1 jurisdictions to going abroad. I've seen, because interestingly, this is of course part of my job is to advise companies to go offshore, and I see that many, not just brokers, also liquidity providers and others, for the longest time, no, we will not do that, we will not do that, we will not do that, and then they fall one after the other, and then they have to start with the first and then the second, because it's just becoming impossible. But of course, this has a huge impact, not just from a regulatory point of view, but I believe also on the local employment, on taxes, on all the other industries that rotates around the industry. So I wanted to hear a bit your perspective on this.
Okay. So a couple of industry...
Don't be too violent.
No, but a couple of industry secrets that aren't that secret. One, all retail brokers operate in offshore markets. If a retail broker says to you they don't operate in offshore markets, then they're lying to you. Simple as that. And anybody in this audience who thinks otherwise, please talk to me afterwards and I'll prove it to you as well. Second of all, and again, it's not directly related to your question, it's also about how companies advertise themselves, and there's been many instances over the years, yeah? Every retail broker warehouses some of the trades. Nobody backs to back everything outside of it again. Again, it all comes down to marketing, advertising, everything else as well.
Regulatory arbitrage.
Exactly. And everybody knows the case about FXCM. We said we back-to-back everything, but it just so happened the offshore entity was owned by them as well. So that's been going on in the industry for 10, 20 years as well. So those two things are facts about this industry.
Thank you. Your perspective.
I think it's getting harder. And the guys who are in this industry for a long period of time would be able to take decisions, taking the benefits against the risks in operating through offshore jurisdiction, and weigh what's the outcome, right? I mean, it's the business leaders and the shareholders of these of CFD brokerages to make that evaluation, take legal guidance, and decide what you want to do. But commercially, do you take a commercial stand to go into a particular market with an offshore license? Well, it's hard to say. Don't do it for very little AUM or very little customers, right? I mean, that'll be a silly approach. But I do agree with what Gavin has just mentioned.
But let's say that tomorrow the regulators in Australia, Cyprus, UK launch a consultation with brokers. They say, give us 1, 2, 3 elements to that if we change, you can bring back some of those business. It will never happen. They will not do that. But let's assume that they go crazy tomorrow and they really care about bringing back the business in to their own countries. They ask what kind of changes will be good enough. Will it be about leverage? Will it be about KYC requirements? What will it be about?
I think to address that question, I was just going to talk about it, right? ASICS has gone completely the other way, right? Through the product intervention order, right? Asking all the operators about design and distribution obligation, about how you onboard customers, about leading questions that you pose. This is getting tougher because regulators are not essentially there to make you successful, right? At best, is to protect the retail consumer, at best. And again, they don't protect outside of their borders, right? I mean, if I'm Australian and I choose to sign up for a very famous Cyprus retail broker trading 2 trillion a month, and I'm living in Singapore, I don't think ASICS has any business to do with you or give you any advice or protection, right?
That is correct. They mostly care about the residents, but because look, I've seen this for a long time, yeah. And sorry, no, you tell me about it.
Well, so my view is it's leverage. So if the regulator said, I'm happy to take on anybody, let's say up to 500 to 1, then they could do their job and bring all that business back on shore. I have a lot of sympathy for the regulators here, yeah? They need to find that fine line between, if they say 0 leverage, everybody will trade offshore, therefore there's no point in having the regulator there. If they say 20 to 1, again, most of it's still offshore. But at what stage do they say this is going to protect the customers and this is going to drive them offshore as well? So let's talk about a country like Thailand, for example. As far as I know, there is no official FX license there, leveraged FX license, yeah? So what happens is 100% of the people trading leveraged FX in Thailand are not covered by any regulator. And so is that good for Thailand? Is that bad for Thailand? I don't know.
Yeah, that is always is like even in countries where there is like in Japan, we all know very well that in the end most Japanese go abroad so much so that the finance ministry of Japan is annoying everyone. Do you want to share any?
I was going to say a couple of things. One is in the crypto side, on the digital asset side, we're seeing the 2 trends, right? Counter to your hypothesis, right? One is the offshore regulators are becoming more stringent.
Yes, correct.
Right? They're upgrading the licenses. They're putting the screws because and they're making operating markets in those offshore jurisdictions less attractive than they were. And then the other trend that we're seeing is, again, exactly opposite to what you're suggesting, and the hypothesis is regulators that are requiring the market, the order book, to be local. So you cannot do back-to-back. You cannot send orders overseas. You have to fulfill the orders locally. We're seeing that in Europe. We're seeing it in the UK. We're seeing it in Hong Kong. Where, well, in the traditional products you can, in the crypto you cannot. Some regulators are looking at what they call authorized jurisdictions, so you can do it back-to-back into some jurisdictions that they deem that they're okay, reliable, but other than that, they have to be fulfilled and the orders marched locally.
So just on that, I mean, so Crypto.com are probably the outlier in the crypto industry, yeah? We all know that the biggest crypto guys are an exchange. That's the veil of legitimacy. Then pump them with perpetual futures, trading offshore, high leverage. That's where they make all their money, yeah? We know that about the big competitors of Crypto.com. So crypto trying to be the white knight of regulation is it? No, crypto generally, not Crypto.com. Them trying to be the white knight is an amusing pitch. Generally, not your company, crypto as a whole.
No, I was referring to the regulators pushing for it, right? There's a lot of crypto. It's a very wide spectrum of players. To your point, right? So I'm not trying to defend or say that anything on the crypto side, on the industry side. I'm looking more from the regulators that are stepping in, the FCA, ASIC in Australia, ESMA in Europe, that are looking at this and saying, "Oh, I'm actually going to start applying to crypto everything that I wanted to apply to the traditional, but I haven't been able to in the last few years." It's going to start happening, which is, to your point, is pushing a lot of the crypto operators offshore and saying, you know what, if you don't let me operate here, if you put the bar so high up here, you're just making it easier for me to make a decision to say exactly that. I'm just going to back-to-back. I'm going to put it a new, nicely licensed exchange offshore, and then back that up with perpetuals.
Yeah, so on the offshore point, a lot of what we get is actually offshore companies in elsewhere like Seychelles or Cyprus and all, and they have a license sometimes in these offshore jurisdictions, and they want to offer reverse inquiry, and they are always writing to us from a Hong Kong and Singapore perspective.
Legal opinion.
Yes, legal opinion to bless their reverse inquiry approach. But we started to see a bit of a change as well, because the reality is that the line is not so clear, especially when you need to then use and reach out to institutional investors. You need to have a proper bank account in a stable jurisdiction. In some of these offshore jurisdictions, a lot of my clients complain about the banking infrastructure. Like, everyone is gone by 3 p.m. and you can't do trades after, you just can't do transfers after a certain time. And it's just very difficult sometimes to coordinate your global fiat flows, right? So this is where some of the major payment institutions in Singapore, Hong Kong, Australia, elsewhere, Canada, start to come in, because they are part of this whole circle of building up the flows which a lot of entities want to do. And I would say that even in the traditional market, the banks, the securities brokers, traditional players, we are seeing a lot of interest. So right now we have quite a number of cases where some of our securities brokers clients want to expand and include crypto products, and not necessarily in offshore jurisdictions. They want to bring it to the local jurisdictions because they're starting to see increased demand, or they see a reason and being to also include this within their market profile. So I think in both ways, it is not always the case that everyone is heading offshore. The opposite trend is also similarly true. I see a lot of flows coming back to the organized jurisdictions. Despite it being so difficult, we continue to see a lot of demand.
Okay, do you think this is maybe more true for like digital asset companies that are getting into the CFD space? Because I see a bit the challenges on the two sides. So digital asset companies, okay, Crypto.com maybe is, as I say, an exception because you already have like 1,000 licenses. But most crypto companies, when the first thing that they do, and sometimes their mistake is they think that is the main challenge, is they start buying licenses around to enter the CFD market and so on, and they expect that is going to be good enough. So that is when from offshore goes back to onshore. But in the case of most companies that are already in the CFD business, do you still see that some of them are putting back the flow in?
Actually, quite a lot of the CFD companies have expressed interest in acquiring, as you said. It's rarely an organic application. They usually want to explore acquisition targets in order for them to explore expanding their business in the region. So beyond Singapore and Hong Kong, of course, we cover APAC, and there's a lot of interest in doing some of the business in APAC and how they can expand. And there's also partnerships, right? So we see a lot of interest in partnerships. And what is a technology service provider is now a bit grey, because nowadays technology service providers are tacked on with lots of bells and whistles and integrations and aggregators and all that, where it starts to go into regulated business. So one clear path that I've seen, for example, if you have seen apps for some of these companies on Apple and Google Store, and one of the big things I feel as though we get a lot of requirements to do on a legal basis is to help them get cleared on Apple and Google Store for a wide number of jurisdictions. We do a lot of those memos. So I kind of feel as though nowadays we are seeing a lot of integrated multi-product, multi-service offering entities, and not just one single offering like a CFD. Usually is accumulated with a lot of other businesses as well.
I think at the end of the day, right, this. If you start drawing Venn diagrams, right, on brokers, on securities and future commodity brokers, CFD, OTC operators, crypto guys coming in, and where's the sweet spot, right? I think that comes back to the next forum at 3 o'clock that Kate is organizing. I think that'll be quite interesting about multi-asset. But I think that what's interesting is companies need to ask themselves, do you want to be a plus 500 or you want to be an Exness? Right? Or you want to be a Robinhood? Everybody is just fighting for that retail customer. And asset classes, what's been trading, what's hot, what's moving, changes all the time. This week when Trump is in Beijing, things change, right? As a broker, whether you're coming from the DNA of Crypto.com, or you're coming from Plus 500, or you're coming from Exness, do you have what it takes, and are you ready to take on the next wave? I think that's the most important question.
Thank you. Yeah, there is sometimes, I think, just an opinion that sometimes the brokers think that it is just about adding a new product. They do not realize that it's instead requires a complete change of infrastructure. Anyway, I think too much regulations, they are getting bored. So let's discuss about AI. So for AI is relevant to compliance, I think, for two reasons. One is because AI can help compliance. On the other side, AI requires a lot of new compliance expertise, particularly now that there are customer service agents, sales agents that in some countries, of course, there are already some rules about requiring a human operator at certain point. And then, of course, there will be agentic AI that will be used for trading. So I just want to have, maybe starting from Gavin, from you, because you're doing some effort for AI. So
yeah, so a couple of things to note there. First of all, I think there will be downward pressure in terms of headcount in all of the companies. Personally, at Axie, I think we'll go for probably reduce by 20% over the next year due to AI. Second of all, in terms of, a lot of companies were worried that AI, everybody's going to be able to program how to win in the markets. Yeah, there was a story, I don't know if anybody read it, about 4 weeks ago, where it had all the AI systems, Grok, Anthropic, all of them trying to predict football results. And all of them went bankrupt because they just couldn't predict it, yeah? And similarly, financial markets. If somebody knows what's going to happen in the financial
did they bet on Italy?
They weren't that bad. But that's the truth of it. The markets are unpredictable. That's why everybody loves trading in the markets. That element of, have you got the edge to be able to win in these markets? But ultimately, you can't predict it. And anybody says that they've got a system to do it and they'll sell it to you, why are they already a billionaire already and not selling it to you?
I can talk about AI from a regulatory compliance perspective, right? The challenges we use a lot of AI. We're a very AI driven company. We just launched our brand AI.com, along with along with OG.com for predictions, right? So we're trying to get out there and everything, right? But internally, from a compliance perspective, AI, there's two challenges that we deal with every day, right? Because everybody knows all the benefits and all the advantages, which are many. But there's two things that we struggle. One is repeatability. From a compliance perspective, we want the same decision based on the same facts over and over again. AI tends to be designed to please. So if you ask the same thing 3 times, it'll change its answer, trying to find out the one that is going to be your final one, not realizing that sometimes you're looking at the same case over and over again, and you need that consistency from a regulatory compliance perspective. The other challenge that we deal with is the explainability of the decision, right? Ability to actually rationalize and explain why the decision is being made and document that decision. Because when we say in compliance, if it's not documented, it didn't happen, right? So we have to have it in writing. We have to have something, and those are the two things that they're preventing us from that right now from pushing AI all the way through. But it is a great tool that digests information, synthesizes information, makes an initial recommendation, initial suggestions. So it's helping a lot. But those are the two barriers that we're encountering.
Thank you.
And I'll also add a different angle to it, which is how AI companies out there in the region want to work with the banks and the brokers and the different financial institutions, right? So these partnerships, and we have seen it quite a lot, especially in robo-advisory, because there's been a lot of white labeling of robo-advisory. So I think one of the difficult elements in the industry is sometimes you do not have a common standard or common outsourcing framework that everyone uses in terms of agreements and such. So it has been quite common that some of the work we have done is to basically be able to explain the AI RegTech technology and how it complies with MES and SFC requirements to enable them to be onboarded by financial institutions. And I've learned a lot in that process, because it requires you to not only understand the technologies, but also understand how these technologies and the methodology can be audited, right? So that is an aspect which I think quite a lot in the industry are also looking to make clearer, to facilitate the onboarding of some of these companies with large financial institutions as well. And also for the large financial institutions, they're also developing their own capabilities, right? But this is definitely something where you have multiple aspects of expertise that need to come to do it. It's not just the IT guys going off and having a fun way. There are questions coming, who are the senior managers who have oversight over different elements in the development, and even if the company that is running the RegTech goes bust, how do you basically gain back control of what you have created? So I think those are very interesting issues in this space where a lot of AI is being used and integrated into products.
Thank you. Do you see a use? I mean, for sales and customer support, there are limitations. Do you think the regulator is going to go very heavy on that, as in completely banning any kind of use, for example, for let's say retention of clients? Or do you think that as long as there is supervision, they are going to be agreeable to that?
I think that in the last few years, there has been quite a lot of guidance in terms of best principles, guidelines, case studies, scenario testing, and expectations. And I think the regulator will hold a lot of these financials into account. I think most recently also, there was a CEO reminder across different financial institutions where the MES in particular reminded the industry that they need to have oversight and understand the technology in terms of risk management. But ultimately, I feel that similar to how digital assets are the risk really a huge outlier in comparison to CFDs and traditional FX products, you have to really assess the risk and understand it and develop a balanced outcome rather than just throw the baby out with the bathwater.
Thank you. Just because we have 1 minute left, just in a few words, I wanted to ask to each of you, if we want to look a bit at the future in 3 to 5 years, what do you think is the main change that you see? There could be either a service that completely disappeared, or a piece of industry that completely disappeared, or something that has completely emerged and taken over the rest.
I think with this whole development of AI and how it changes a lot of things, for the CFD space, I think a lot of these tools will be used to the convenience of the retail investor, right? The way he trade, it's going to be a lot more simple. It's going to be a lot less hassle. That's going to take place. How brokers manage risk will get even more sophisticated. I think that the pace will pick up, but unfortunately, I think not making any comments about any of the brokers in particular, but I think the crypto industry probably has a better handle on AI than the CFD industry. I think CFD industry is still figuring out how to increase productivity and how to use this. I know for sure one of the crypto exchanges, not the top 10, right? 500 over employees, they sign up for Claude Enterprise level to manage everything from HR to performance evaluation, encouraging all their staff to use AI. So I think that's really moving a lot faster on the crypto side.
We use one. Like I come into work every day, I open my AI, and it's read on my email, it's read on my Slacks, it's read on my WhatsApp, Telegram, and it's prepared for me a thing of these things to do for the day, what my priorities, and then when I go back and I answer an email, it automatically updates it, and it keeps my to-do, my priorities, and my strategies all set up in one set. So it is there. To your question, for me, the future, it feels to me like I compare it to a car. Right? The car that you drive today, is it fundamentally different than what you drove 30 years ago? No, you still get in, you turn it on, and you go places. How it works, all the underlying technology, all the bells and whistles, everything around it is now new. The GPS, the electric engine, everything is new. But at the end of the day, you get in, you press the accelerator to go, you press the brake to stop, you steer it. I think in the financial service industry, it's going to be the same. It's going to feel the same. We're going to do the same thing that we're doing today, 10 years from now. It's just that the underlying, the crunch behind it, it's all going to be AI and blockchain.
Thank you. I think we stop here because we are out of time. Thank you so much to all of you.
Thanks, Gino.